Welcome, everyone, and thank you for joining this special webinar brought to you by Shore Capital Partners and Shore University. Today, we're excited to have Nigel Green lead us through the crucial and perennially difficult topic of organic growth. For the last 15 years, Nigel has been a Fortune 300 healthcare executive and entrepreneur. He's helped build two healthcare sales teams that reached over $50 million in annual revenue. He also grew an additional sales team from very little revenue to nearly 10 million in just 2 years. Currently, Nigel leads revenue growth at Affirm Health. In 2020, Nigel published Revenue Harvest, a sales leader's almanac for planning the perfect year. He also coaches and advises quickly scaling B2B sales teams. We will be recording today's session and we'll make it available to you after. Please put your questions in the chat. We'll leave a few minutes at the end for Nigel to respond to as many as possible. With that, I'm just going to hand it over to Nigel and let's all learn together. Nigel?
Thank you, Anderson, and thank you to the rest of the Shore University team. It's a pleasure to be with you all with Shore Capital, and thank you, Shore Capital, for having me today. So today we're going to talk about ways in which you can increase organic growth. I call it timeless pieces of advice because I think these pieces of advice are going to work in any economic environment, and they're not built on fads or gimmicks or any kind of quick fix. They're actually really hard, which is why I call it advice. And so I wrote a book about this. If you have insomnia and want to get some sleep, this is a real good way to put you to sleep. In 1 or 2 pages, you'll be sleeping like a baby. This is a little bit about my background. As Anderson said, most of it's been in the mid-market healthcare space. I've worked in just about every type of healthcare, whether it be on the supply side, clinical services providers, contracts, payers, and then business service providers that call on those organizations. And one of the things that I wanted to point out, is particularly relevant to you if you're listening and watching this, is that you want an exit, and you want an exit that's financially acceptable and viable, not only for you, for your team, but your capital partner. I've been fortunate enough to have a few of those at an early age. And these pieces of advice are really about what I think help those companies exit at a favorable outcome than what our contemporaries or a proxy organization would have been able to accomplish. And I'm going to share them with you today. A lot of parts of my career, I look back and I was glad I did something, or maybe I wish I had done something. And then the conversely is also true. There are things that I'm glad I didn't do, and there are things that I wish I hadn't done. And so again, this is just advice around sales and marketing, but I think we can all relate to things that we wish we'd done, or glad we'd done, glad we didn't do, glad we didn't do. The thing I want to make sure you understand today is that you're already on the clock, and your sales decisions now are going to determine your exit options later. So what we're doing now, while it may seem like you've got time, they take time to put into place, take time to get buy-in. And these 4 pieces of advice I'm going to give you can fundamentally reshape your options, but you got to do it now. Okay, so this is the reality, and this is the work that I do. I get called into companies and they show me what their strategic goal looks like. That maybe you've had the opportunity to already do your strategic planning session with Anderson and Michael, and you set forth these really lofty goals for organic growth. Well, then 6 months, 12 months, and it's yo-yoing, things beyond your control. They stand in the way of that expected organic growth. And so I get called in to help get things back on track. Well, I think we can avoid some of these scary realities today by putting some of these 4 things into place. Not only will you be glad you did it, but other folks like Shore, people on your team, your family, your business partners, they'll be glad you did it as well. Okay, so again, like I said, this is advice. This is not rules. One thing that I want to make sure you understand is you're the expert in your business. You're the expert in your space. You are the expert of the way the problems your customers face show up in their business. And you're ultimately the expert as to whether or not this advice is going to work or not. But it's advice. And like all advice, even the advice you give, you can take it or leave it. But know that it's coming from someone that's used these 4 things to have very favorable exits. And the other reason why I want to talk about it being advice, not rules, you don't have to do it. You might be very well set up to have the exit that's okay, that you're satisfied with. But if you're looking for an extra couple of turns on the valuation, if you're looking for things that set your company apart to a potential acquirer, here's some advice for you. Okay, so the first piece of advice is this idea of a believable organic plan. I showed you the first slide. Everything's always up and to the right. So it looks good, it feels right, but how are you going to do it? Okay, and so most teams don't hit their targets. They set out for the year. They've got an idea of where they want to be on their organic growth trajectory in 12 months, and they're not there. And here are 4 common reasons when I come in and see an organic growth plan that are easy for me to identify and say, well, this is why you're not hitting your targets. It doesn't support the business objectives. I'll give you a really easy objective. So the business might have some profitability number where you're trading on multiples, but then you've got a sales plan that is highly driven to new revenue. And so you're growing your revenue, but you're not, the EBITDA growth isn't trailing it because you're doing bad deals that don't meet the basic requirements of the profitability. That's one thing. It lacks step-by-step guidance, meaning that how we're going to do it, qualitatively what it needs to look like, isn't there. The depth required step by step, product by product, market by market doesn't exist. And it doesn't account for the unexpected things that can happen in the course of any given year. People leave, customers leave, market changes, supply chain issues. There's none of that. We just think everything's going to be beautiful throughout the course of the year. And then it stops short of specific result assignment, meaning that that's great. You want to grow 15%. Well, have you assigned it to each seller? Each product category? Have you thought about the number of leads you're going to need by month, by week, by day in order to matriculate them at a deal velocity that's acceptable so that you stay on pace throughout the course of the year? So here's some signs that it doesn't support, that the sales plan is not supporting the business objective. Okay, so when you go out and do your annual planning, okay, if you've got a plan, but then there's no adherence to the acquisition cost expectations. So you're focused on fueling the business with new leads, but we don't have rigorous fundamental economics in place on what we're willing to spend. Well, then you might have to throttle off the gas later in the year, and you're going to leave a sales team starving because we spent way too much on leads too early. I need you to be thinking about this level of sophistication as you go into your believable organic growth plan. Okay, maybe there is a inappropriate balance of new revenue versus revenue retention. Oftentimes what I see is we're so focused on new customer acquisition. Okay, we invest heavily in getting new logos, new revenue, that we fail to see the power of going back to a customer we've already sold to and either charging more or working with them to come up with a new offering or a new creative way to solve that problem that they might ultimately pay you more for. I just read in Salesforce annual report that 70% of all new revenue for Salesforce.com comes from existing customers. Okay, another way that I look at this is the offering product expansion considerations. If the organic growth strategy calls for a de novo product, a de novo market, but I don't see considerable resourcing and considerable expectation management specifically for that de novo aspect of the plan, it's just built into a larger organic plan. That's a pause for cause for me. And it's a red flag for me to sit down with a management team and say, have you really considered the nuances of something new? And it won't perform the way some of these legacy offerings or legacy markets have performed. And if you're going into your selling year making those assumptions, I think they're dangerous and potentially flawed. Stale or unsophisticated pricing strategy. That's there are 3 ways to grow a business. There's get more customers, sell those customers something else, or raise your price. And a lot of times it's as simple as really sophisticated approach to pricing. I'm not talking about a blanket price increase, but thinking about creative ways to build in levers and mechanisms to systemically and thoughtfully raise price, manipulate price throughout the course of the selling year and throughout the lifetime value of a customer. And last but not least is deal velocity. This is a huge crippling component to the way sales teams perform. And a lot of the reason why I think this is fundamentally changed and why I want to talk about it today, because all buying processes, all buyers' journeys, all sales processes have been disintermediated drastically since COVID. There's no going back to normal. And so if you're waiting on, and I know we're coming out of wherever you are on the spectrum of returning to normal, it's a great time to go back and say, how has my buyer sentiment changed? How has the way in which my customer wants to do a deal with me changed from last year, 2 years ago? A lot of your data from 2019 on deal velocity, a lot of your data from 2020 is no good anymore. And so you're going to have to go back and rethink and re-architect how many days a certain deal should stay in a stage. And if you haven't done that work now, my advice is go do it, because I don't know how believable your sales strategy is if you haven't done it. Okay, won't spend a lot of time on this slide. You'll get it, but these are just questions that you should be considering as you think about whether or not your sales plan, your organic growth strategy for the upcoming year is believable or not. Okay. So what I want when I talk about this step-by-step guidance that you need to have, it's not enough to say we need this many dollars or this much percent of organic growth in the month. Like, have we built in constraints to say this is enough? I don't want my team to get exhausted. Have we thought about the available resourcing that's going to be required in order to hit month over month, period over period organic growth goals? There's a function of seasonality that can't be ignored, and there's a function of supply and demand. Specifically, if you're in the direct to consumer space, what are you willing to pay? And some months are you going to have to spend more to get a viable lead versus other months? That step-by-step guidance has to be built into your plan. And how achievable is it? Like, if I see 15% year over year annual organic growth, well, is that true really? What goes into that? Can you defend that? And is the time frame long enough to manage it, short enough to have teeth? So what I often see sometimes, and the reason I put this in here, is we set out with a growth goal for the quarter, and it feels short enough, but is the quarter really even long enough for some of these longer deal cycles to have it move fast enough? You don't know that. You're the expert. So these aren't rules. Again, just piece of advice, things to consider. And is it all believable? And can you achieve it with a high level of consistency? And is it controllable? I love this story. I think it's a great summary. And you can almost take this example that I'm going to share with you and put it in the business world. So this story happened in 1911. It's probably one of my favorite leadership stories. It shapes the way I think about sales planning. You've got two professional adventurers, Roald Amundsen and Robert Falcon Scott. These guys are not chumps. They're both coming off successful adventures to other parts of the country. What they were trying to achieve was to be the first expedition team to reach the South Pole. All right, so this is 1911. They don't have all the technology. They don't have the Patagonia gear. They don't have all the stuff that you would expect an adventure team to have. What's remarkable about this story is that one team, Amundsen, left, made it to the South Pole the exact date that they said they would. So they leave. 2 months later, they get there exactly when they said they would. That's not it. They actually made it back to base camp on the exact day that they said they would. So for the other team, Scott, they made it to the South Pole only to find that Amundsen's team had beat them there, left it. They know that because Amundsen was kind enough to write a note. Maybe he was prudent enough in case he didn't return, because he was terribly fearful and considered all types of contingencies. But he wrote a note saying, "We made it. We're on our way back." No one from Scott's team would make it home. They would all die from starvation and frostbite merely miles from their return base camp. They both went 1,400 miles. They both left within days of one another. What happened here? So what happened here is that one team set out on this notion of a 20-mile march, and it was believable because they said, we're going to do 20 miles every single day. It wasn't, in this day we've got to go 60 miles. Tomorrow we've got to go 80 miles. It wasn't like month over month. It got bigger and bigger and bigger. What they said was, we have to do something that's largely within our control. We have to plan for adverse weather. We have to plan for things that we can't control. Despite all of the uncontrollable factors, what's something we can commit to doing, and what's in a time frame that's relevant and meaningful. And so what Amundsen said is, no matter what happens, we're going to do 20 miles today. Good weather, bad weather, 20 miles. Sick, tired, 20 miles. If we feel great, we get an opening in the weather, we're not going to push it to 40. We're not going to do 60 miles. We're going to stick with our 20-mile march. So he maintained this rigorous commitment to believable, totally controllable expectations, so that when adversity did strike, they were more confident in their ability to perform in unbelievably uncontrollable and unkind conditions. Scott's team didn't do that. When it was holed up, if you can go back and read in Scott's diary, he would write things like, weather is so miserable, there's no way anyone could move or survive in this weather. He didn't know that on that same day, when he's holed up because of gale force winds and no visibility, Amundsen's team went 20 miles. So his team would hole up. Weather's great. He might write something like, beautiful weather, cooperative wind, pushed on for 40 miles today. Well, when you push on 40 miles and do 20 more than you're supposed to do, the next day they consume more food, they were tired, they were sore, and they weren't going to get 20 miles in the next day because they're still recovering from that 40-day push. What you're going to see in this story, and what I hope you're hearing, is that one individual and one team built a plan that was largely controllable because they stress tested down to very deep levels. The other team, still professionals, still smart, capable, talented expedition team, cost them their life because they didn't do the work of drilling down and having a stepwise commitment to what are we going to control, what are all the inputs, and how do we make sure that we set ourselves up for a safe return. And this is kind of the last part here before we get into some of the other pieces of advice, but that you have to prepare for the unexpected. Top talent's going to leave. All customers eventually leave. So what happens if you get halfway into your year, one of your best customers leaves, one of your best reps leave? Your plan needs to account for that. De novo expansions rarely go as planned. We all like to think everything's going to be smooth. It never happens. Okay. And then when you get your organic growth plan, if you're in the B2B space, you got to assign it down to customers or accounts. You've got to assign it. If you know that you've got to make up 15% in new revenue this year, if you don't have those customers, it's on your sales team to begin naming in their prospect list who they think by when is going to help close that gap. If you've got 4 or 5 different offerings, if you've got multiple locations, you've got to take that organic growth plan. You've got to assign it not only to the market or the location or the product, you got to assign it down to the team that's going to drive that. It's not enough to say we need 15% or 20% organic growth. We got to have it by when, by where. You've got to really do the work. It seems like it's worthless, but because the plan itself might actually be useless, but the exercise, the planning, is indispensable. And this is an example of what I'm talking about. If you've got, I know there's some dental practices in the platform, I'm looking for, how are we assigning organic growth to new patients to get teeth cleaning? How many of those are going to come back and get a whitening? How many of them are we going to identify as meeting the criteria to get retainer or cosmetic? I'm looking for this level of specificity down at the patient level in the direct to consumer space. Look at some of the historical data and say, how do we build a believable plan that's not just on, well, we've got to have a certain number of new patients. Well, how do we take those new patients and every 6 months in their check-in, how do we identify them for some ancillary or some upsell that's going to drive the new organic growth for this business? Last thing, you have to believe in the plan, then it has to be communicated, and the sales team has to believe in the plan. And this kind of sets up my second piece of advice, and this is what I see so often. You believe in the plan, the sales team believes in the plan, but you can't get alignment in the plan. So, and I use the word alignment intentionally. It's very rare, especially with multiple founders, as you roll these different practices or different discrete businesses up into a platform, that everyone is going to agree on every aspect of your sales plan. I'm not asking you to go get agreement. I'm asking you to get alignment. And alignment means we're going to disagree, about certain aspects of how we're going to do it, but ultimately we're going to land on a way forward, and we're not going to talk about it outside of this room in ways that are disparaging or discredit the plan that we've put in place. So many times I see organic growth stall because of a lack of alignment, especially with the founders. And so you've got to make sure that the founders, where they may not agree with every component, they're bought in with what we need to do. The reason why, and again, like I said earlier, this piece of advice is hard, but the reason why you have to do this is because we're rarely happier than our companies are healthy. And I'll even go so far as to say we're rarely as successful than our companies are healthy. And so if you're listening to this and you're looking at your organic growth plan, it might be time to kind of stress test, am I using the founders the right way? Am I leveraging their expertise? Have I presented it to them in a way that they're bought in and they're ready to go forward with us? Don't trade what you ultimately want, which is a very favorable, lucrative exit, for what you want at the moment. Meaning, don't try to strong arm this plan. Don't try to skip the steps and just assume everybody's going to align. Go out and have the difficult conversations, even down at the front lines of this is what we have to do differently in order for us to achieve something that is rare and extraordinary, and get everyone bought in on what needs to happen early so that we don't get halfway through the year and realize, oh man, we're not doing what we need to do, not because of fundamentals, but because we don't have a healthy leadership team. Don't trade a great exit, for doing things the way you want to do it. All right, last 2 points are on this founder level and getting buy-in. If you built this plan and your sales leader wasn't at the decision-making table and they didn't speak into it, your plan's not believable. If you've built this plan and then your sales leader isn't capable of executing the plan or isn't able to do it because of alignment issues or other factors around culture or barriers to being able to exit the plan's no good. Okay, third piece of advice. I see this happen a lot of times too, where the strategy of the business isn't aligned with the sales strategy, meaning that the work you did in your strategic planning session, your 3 to 5 year strategy planning session, what needs to be true in 12 months, 36 months, and in 5 years is fundamentally misaligned with what you are incentivizing your sales team to do. Incentive plans drive everything in a sales and marketing organization. And if those incentive plans don't closely match what the business needs done, you're going to have a hard time. Let me give you an example. And I talked about this earlier. So the business strategy might be a certain EBITDA percentage or number. Well, then the sales strategy you need to incent and pay commissions on deal profitability, not just revenue. If you, in order for you to grow the business where it needs to be, you need new customers. Well, then you shouldn't treat every sales dollar the same. You need to pay a premium for new sales dollars. Okay. If you've got a revenue retention strategy, maybe you've got a big component of your business is just keeping customers and becoming more profitable. Well, you have to probably create some specialization within your sales strategy and get some experts at customer retention, customer success to manage that and not have generalists in the organization. If you've got a new offering, a new market, new location, or a new product altogether, and your compensation plan doesn't illuminate the realities that this new offering needs to be successful, if it just treats it like all of the other existing offerings in the comp plan, it's not going to be successful. Your business strategy and your sales strategy are misaligned. It may be that in order for the new offering to be successful, you need a different type of seller, a product specialist, someone that knows this customer and knows this segment well, and you need to just have them sell it versus the rest of your sales team sell it. These are the ways in which the business strategy gets misaligned with the sales strategy, and it costs you not only in the selling year, but ultimately you pay for it at the exit. Okay, so I want to spend some time here on this fourth piece of advice, which is specializing your sales role. I see this oftentimes in mid-market maturing organizations. And I'll start by this by saying, if you have a generalist sales team, meaning that your sales team needs to prospect, your sales team needs to manage the nuances of a transaction, and then they have to service those customers, this is what you can expect from a salesperson over time. Their performance is going to plateau, and the cost, the raises, the commissions are going to outrun their contribution to the business. So at some point, you have to get to a place where you decide that in order to achieve your organic growth, we have to move away from this notion of generalist on our sales team. How you go about creating specialization, you know better than I know, because you know your business better than I do. I'm going to show you some examples that might look or resemble your sales team that could be costing you organic growth because you haven't done the work of specializing the sales team to the extent that you could or should. I talk about this in my book, and this is an example. When I took over a sales team back in 2013, they had these geographical territories, meaning that they had an individual that was responsible for whether it be a state, a region, zip codes. They had this imaginary line and they couldn't sell outside of it. And every time a deal or a new opportunity came up, regardless of where it came from, if that company existed in that magical boundary, it became theirs. What I found is that there were parts of the country that were underserviced or not serviced at all. Another thing that I found is that relationships really matter in selling. And so if a customer knows one of your sellers, they have a relationship, but then has to be handed over to another rep because of some arbitrary geographical territory boundary, the chances of you winning that business or winning the business and keeping the business are diminished. So what I did is I said, in order to get the more out of this sales team, because I couldn't go hire more salespeople, I said, I'm going to eliminate geographical territories. I'm going to create an account management strategy versus a territory management strategy. So what I decided to do was to allow reps to specialize based on customer segments versus geographical segments. Meaning, if you've got deep career capital serving this type of customer that looks and feels this way, I want you to prospect and go find more of them, because you're going to be more dangerous in the marketplace, and you're actually going to be more dangerous than any of our other sales reps at solving the problems collaboratively with that customer. I want you to handle all of that. And so what we did is we came up with very discrete customer profiles and started assigning reps to a customer type versus a geography. We more than tripled the number of active accounts in 24 months without hiring an additional rep whatsoever. So my cost and contribution graph looked nothing like the first one I showed you. I had reps driving more contribution at less expense to the business, and they were happier because I didn't get to tell them who they could prospect on or who they couldn't prospect on based on some arbitrary geographical boundary that exists out in the world. Then inevitably we had to do this level of specialization too. So we had these 12 reps that were specialized based on a customer segment. Then it got to be where they had so much demand for their time on closing business that we had to separate prospecting. Now, we didn't absolve them or let them off the hook from prospecting altogether, but their prospecting time and capacity became more discrete to like their top 25 or 50 prospects. We built out an entire prospecting team that specialized in the very top of our funnel. We had one team that just did outbound, we called them SDRs, and then we had a market response team. We did all of the qualifying with this team, and it didn't touch one of my highly comped account executives until it met a certain criteria or reached a certain stage, or they showed a certain buying intent. Then I put it in front of my reps. Then eventually we had to specialize even further, because we had all these new leads going to these reps that were already performing well and already kind of maxed out. So instead of going and hiring more expensive reps, I supported them with a customer success team that handled a lot of the day-to-day management of that customer. They were responsible for retaining, upselling, and cross-selling revenue within their assigned accounts to free up the account executives to go do some prospecting, close these big deals, and then create more capacity from my top of the funnel team to feed them more deals to close, because they no longer had to spend a lot of the day-to-day time managing nuances of the accounts that they had already won previously. And salespeople generally don't like being put in a world where they have to go prospect, close deals, and then manage those accounts. If you're living in that world, at some point, if you want a favorable exit, anybody that's going to buy your business is going to look at it and say, well, there's nothing really special about the way they're doing sales. There's nothing really thoughtful or sophisticated. So at some point, to get an extra couple of turns, you're going to have to show them that you have a sophisticated selling machine, that it's worth them paying a premium to buy, because this machine is going to produce in years to come. And so that kind of sums up the 4 pieces of advice that I had and wanted to make sure that we covered today. Maybe some of this triggered something for you, that there's something you know you need to do, but you just aren't doing it. And then what could that be? But like any piece of advice, you can take it or leave it. We talked a lot about planning. I've got some additional resources. I have 3 pieces of resources. If any of that planning resonated with you, I've got an entire sales planning simplified course. It comes with templates. You can go and I'll walk you through how to build a B2B sales plan. And then I've got another resource called a successful sales kickoff. Plans are great. They're only as good to the extent to where people buy into it. So I've got a way to teach you how to get buy-in with your sales plan and with your leadership team on how to begin seeing what's in it for them to go execute that plan. And if you're ready to maybe make some specialization in your sales team, I've got an entire resource that'll help you think through how you switch from like a geographic or a territory model to a more usable, scalable account management strategy. And then I just recently published a course on hiring salespeople. It's 2 hours. If you're hiring a salesperson, this might be something that you want to consider before doing it. What I've found is that hiring salespeople is the hardest thing an organization can hire for, because salespeople spend their entire career interviewing, whether it be for a job or with a customer. They are masters at knowing what to say, when to say. So it makes it really hard for someone in human resources. And frankly, most sales managers aren't very good at interviewing salespeople either. But I've interviewed over 5,000 professional sellers, hired over 500, and I've broken the hiring process down into 3 steps. And I put it into this course so that folks like you that are going to have to hire people eventually can learn from the mistakes that I've made and not make those mistakes. A bad sales hire costs you anywhere between $150,000 and $300,000. That doesn't help your prospects for organic growth. That's what I have for you. I think we've got some time for questions, so I'm going to just be available for that.
Thanks, Nigel. Yeah, we have a couple of questions to throw out there, and feel free if you have some questions in the back of your head to put them in the chat, and we'll bring those up. But first question is, do you recommend replacing, if you have an existing generalist sales team member or members, with specialists or training? Which is the sort of more reasonable expectation given reality and the challenges of hiring, for example? Is it reasonable to think you can train someone up, or how do you approach that?
So I think that all generalist salespeople have a specialty that they're naturally wired to do better than that generalist role. And so I think it's our job to go say, okay, is Nigel in this generalist role? Is he good at prospecting? Does he not enjoy it? Is he good at managing an account? Does he know how to close business? I think it's our job when we move into a more specialized sales structure to find the strengths of our existing generalists and invite them to step into a specialist role based on their competencies and where they're really dangerous for you, and just have them focus on that. Then go and begin to augment your generalist, your old generalists that are now in specialist roles with new specialists to support them. That would be my approach. I think that I'm not a fan of getting rid of generalists unless they're just fundamentally underperforming. I like the idea of finding out where are they uniquely positioned to specialize, and let's move them into that role, and then let's go hire new specialists.
Great, thank you. Second question, what are your thoughts? What are the best ways to evaluate if your sales are sluggish? what are the best ways of figuring out if you've got a messaging problem, you're a wrong market problem, you've got a wrong team problem? Any thoughts on how you distinguish that from a broader sales perspective?
When sales are sluggish, the first thing I do is inspect my pipeline. And I don't do it blindly. I go look at my best customers. So when sales have stalled, first thing I do is I go look at my best customers and I say, who are they? How do they show up in the marketplace? Meaning, why are they buying from us? What are the firmographics? What stage of business, industry that they're in? How we solve the problem, not just the problem we solve, but how we solve it for them. I go back and look at my best customers. Then I go into my pipeline and I look at my leads and I force my salespeople to say, when I look at your leads, which of our existing customers do they most mirror? Who do they resemble the most to you? Oftentimes what I find is that deal velocity, messaging is not the issue. It's that we've got a funnel, we've got a pipeline, and that it's slowing down and sales are sluggish because the customer isn't as drawn to how we solve the problem, the novelty of what we do, the same way that our existing customers are. So we've probably got a training opportunity. We might have a messaging opportunity. We might have a positioning problem, but all of those are symptoms. So whether it's messaging, lack of volume, are symptoms of we have found deals and we have found prospects that really aren't ideal for us. And it could be that we're just needing to push them in to hit some type of metric around number of leads and by stage. And that happens sometimes. It's a real problem, but we've got to go in and stress test our pipeline against how well do they align with our ideals.
So switching gears a little bit, how do you evaluate what are the good traits of a sales manager? The question comes from someone who's not been successful in promoting a good salesperson into the sales manager role. How do you think about that role when you think about, because you talk so much about team and sales team and think in those terms, how do you think about that sales manager role?
Your best salesperson is going to be a terrible sales manager. I love top performing salespeople. When I look at them, generally, there are exceptions to this rule. Generally, they are wired to get a deal done at all costs. Okay. So that means that they will bend the rules and then ask for forgiveness later. That means they leave a wake of destruction behind them, a wake for you, the founder, to deal with because they sold it at a price that maybe you didn't like, or they sold it under a commitments that we usually don't make. And it's created stress and strain on other departments to clean up. That's what top performers do. So then when they get put into a management role, they just allow that kind of behavior to run rampant in the organization, or they just step in and do the work of selling for all of your underperformers because it's easier for them to just get it done versus teaching. And so both of those outcomes, in my experience, are bad. I have found your best sales managers are your core performers, meaning that they're probably somewhere in the middle third. They are like 75 to 95% to plan over time. Their values are different. Their values are they're curious. Their values are they're solution oriented. They may not be as driven to get a deal done by a certain timeline. They're more interested in the nuance of how we get it done, and they're far more collaborative. So if when you're thinking about which one of my sellers might be a good manager, look for that sales rep that maybe they're not just blistering the ball on paper, but they're volunteering to be on this committee, or they're volunteering to train a new one, or they are always curious about what's going on in this part of the business. Those are indications of someone that's curious and collaborative and that would be a good manager. But they're not your best salesperson.
Great. Next question, given how complex the hire is, to what you were speaking to before for salespeople, how can HR help with the right screening questions? What do you recommend that HR can do to be more helpful in this difficult hire?
So I've got a resource, 70 plus interview questions that I use. Okay. So and I'm gonna kind of answer it in a different way. I don't know that maybe HR can be helpful in giving this question set to the team that's interviewing. Here's where I think HR can be most helpful during the process. We tend to, especially when we like a candidate, skip steps, which is very dangerous. We all have biases. Like I have a bias for hiring ex-college athletes. So I have to check that against a process to make sure the Nigel that used to play college football isn't just hiring someone because they played a sport. So the best thing an HR person can do is hold the decision-making team to not skipping steps, especially for internal referrals, or someone that used to work for the sales manager, or someone that for whatever reason we're really excited about. It's so important that we don't skip steps. And I think there are 6 steps to hiring salespeople. And a lot of times the initial criticism I hear for that is, well, we got to move fast. We don't have time to do all these 6 steps. And I say, well, wait a minute. No one said you had to have a lot of time lapse in between the steps. You can move fast. We just don't skip steps. And the reason why we don't skip steps is because salespeople are really good at interviewing. And so we've got to use HR to hold our biases and make sure that we don't let one really good interview mask really bad behavior or an ability to come in and woefully underperform against expectations.
Great. Got one more and open it up again. If anybody wants to add, pop it in the chat. Nigel, you've clearly had success in leading and building sales teams. What behaviors and attitudes does a sales leader need from a CEO and CFO to be successful? It seems a really good sales leader / salesperson can be unsuccessful without the right support. What's the right support from company leadership?
That's a phenomenal question. I like a CEO, and some of my favorite CEOs at the time, I didn't understand why they were being this way. And I really found myself uncomfortable interacting with them. But this is the posture and the leadership that a sales leader needs. I need you to challenge the fidelity around what I'm presenting to you. Sales leaders are they're energetic, they're exciting, they're charismatic. They should be. Good sales leaders are. Oftentimes, when we don't have someone that can be stoic and say, how is this true? Show me the data. Help me understand. Show me the fact pattern. We have a tendency to overstate the pipeline, to overstate someone we want to hire's capabilities, to overstate the reality of a deal being closed. And so there's a line between challenging and just being curious about the fidelity. And I think it's our job on the management team to say, it's great. That seems like there's a lot to be excited about. Show me how we got here and show me the steps that need to happen. So be really inquisitive and not like you're don't believe them, but just to help them think through the range of potential outcomes that could exist so that they do some contingency planning.
Awesome. We have another question that came in. At Shore, we have a short 5-year hold period from launch to exit. We typically start with acquisitions for the first few years and then turn our attention to organic growth. But that organic growth always seems to lag. It seems we need a process that starts earlier, but we don't want to waste time or money. Any thoughts or recommendations in that, given that context?
Well, it's a great question. And I think organic growth starts as soon as you leave. I know that there's this whole focus on acquisition, and my thought would be maybe it's worth partitioning an organic growth team that doesn't even really get exposed to some of the acquisition deals so that they're not distracted on going back to our existing market, existing customer base, and being maniacally focused on getting more from the customers that we've had for the years that led up to the deal, and going back to the market and building on our existing assets while there's this separate team that's going out and entertaining the acquisition strategy and the acquisition growth. Now, that's not to say to be ignorant to the realities that absorbing those acquisitions into the business and creating a structure that can absorb a new team and a new acquisition. I'm not saying that. I'm saying don't distract them with, well, we got this LOI that's out and we have this other LOI. They need to just be focused on organic growth from day one or it's going to lag. It has to be just as much of a priority at the management team level to not let it lag while on parallel paths we're acquiring new assets.
Awesome. Well, I think that's, oh wait, we have a new one that just came in. What's your view of CRM tools? Most salespeople hate doing data entry. Any thoughts on that?
Yeah, I am largely tool agnostic. What I'll say is most salespeople hate CRMs because the CRM is not for them. The CRM is for someone else. It's for someone to inspect their work. I like CRM tools, and I'm going to use a word that's not real, that auto-magically does work for the salesperson. So if you want your salesperson and your sales team to use the CRM, actually build it to help them do more versus distract them or take them away. So if I have to send an email to a prospect, then go log it in the CRM or make a prospecting call, then go make a note that I did it, I don't want to do that shit. I'm not going to do that. So you have to use technology to be insightful, to eliminate steps, to do work for the salesperson so that they can spend more time in an informed way, right? Because that's what a CRM really should be, an intelligence driving tool to spend the right time with the right people, not suck time away to do administrative work.
Awesome. Well, Nigel, incredible insights, and I know it's just the tip of the iceberg for what you have to offer, but we really appreciate your time today. And as always, look forward to the next opportunity to work with you. As you guys saw at the beginning, you can hit nigelgreen.co for additional insights and information from Nigel and to connect with him there. So thanks again, Nigel, and we'll look forward to next time.
My pleasure.